Let's also connect with Sanjay Dutt. And Sanjay, it's turning out to be a manic Monday, and we're getting fairly accustomed to these massive crashes in the equity markets. Now it's 1,100 points off on the Sensex. You've got crude prices as well that are seeing an absolute slide this morning. What exactly is it that you're advising investors to do? Because they're purely hitting the sell button.
I think at this point of time, the investors must realize it's the global financial system that's kind of semi-broken and adjusting to the new realities. The new realities not just being the, coronavirus issue, which we have no answers for at this point of time, as Nilesh was saying that when the cure comes, if it comes. But more importantly, we have to look at the dislocation that's happened over the weekend on the oil side. The entire OPEC and the non-OPEC country discussion falling apart, and seeing the oil prices just collapse altogether. And similarly see the entire currency equations across the world. We had the Mexican peso, which is off about 7% odd. Now, it's all this then global turmoil is what we are caught in. So there's nothing really local that's we need to panic about or we need to worry about. The Yes Bank issue has been fairly well handled by the government. I think by end of this week, we'll have absolute clarity on how State Bank is going to handle the transition along with other investors. So I don't think investors need to really press the panic button anymore. On the other hand, I would say that investors who have courage, who've seen conviction ideas, the risk-reward equation is favorable right now, may start to nibble in and buy stock for about 2 to 3 years holding. Yes, a lot of people will give the argument that, you're buying a falling knife, but none of us can call the bottoms or the tops in this market. It's all got to be stock specific and what my risk appetite is all about. So if your risk reward at this point of time as an investor is very favorable, do not sell, at least if not buy, just stand on the sidelines.
Indeed, perhaps easier said than done at a time when you're looking at an absolutely abysmal screen day after day. But Sanjay, I just wanted to also get in your view as to what you're expecting in terms of the global central bankers' action and back home as well from the Reserve Bank, as all eyes are on what we might see on that front.
Very good point you raised. I think towards the latter part of today or maybe tomorrow sometime, if things don't start to calm down and global markets, financial markets, I'm just not talking about equity markets, but the entire spectrum that I spoke about, that's the oil markets and more importantly the currency and the debt markets, because in the US the entire yield curve from 2 years maturity to 30 years all have gone below 1%. This is the first time in the history. So therefore I think the global central bankers and fiscal policy planners and executors will take a call collectively and take appropriate steps. They've already made statements last week when the US Fed cut 50 basis points, as well as the G7 conference call that happened. So I will not be surprised by end of today or tomorrow, global central bankers along with the governments may come in and take appropriate steps to calm the markets more than anything else, because in this kind of situation you can't do anything more but to ensure that volatility settles down, people sanity starts to return. So definitely there will be some action, in my opinion, over the next 24-48 hours if things don't settle down.
All right, so 24 to 48 hours is what we're watching out for, and what will be critical. And throw into that mix the fact that we have a truncated week, Sanjay, and we're already seeing a sharp move downwards on the Dow for Monday. I understand, I take your point in terms of just sitting on the sidelines and waiting, but should we even see some stability return? What will it take for investors to come back to the market? And even if they do, will we now see an even further polarized trend than we have till now?
I don't think we'll see a further polarized trend. Strong companies which have come off 10 to 30% from the highs, which some have come off, you would see buying coming in there. What like Nilesh was correctly saying, that some mid caps and small caps have corrected more than required. The valuations are very attractive. You would see some buying slowly coming in there over today, tomorrow and next few days. But the most important thing is that this is not about the equity markets right now. It's got to do with the global financial system, which is rattled, given oil, given the corona issue, given the interplay of currencies and interest rates, etc. All the markets are shaken up at this point of time. When things calm down, then you will see some sanity to return, and then one can figure out whether you are going to be in a polarized market or what are you going to be in. So it's too early to actually say what's really going to happen in the next 24, 48 hours, but I'm reasonably confident that there would be some global action, concerted global action from the G7 countries or many other countries to actually stabilize the financial system. So equity investors just need to, I repeat, just need to stand in there, hang in there, hold it out. You've got courage, you've got money, look at stuff to buy, otherwise just sit it out.
So, say investors, with a fairly long-term time frame who are willing to venture into a market like this, would you like to be a little bit more specific as to where the opportunity would arise in terms of perhaps some sectors that give you comfort or some valuation lucrative options at a time like this?
At a time like this, I think, given the global uncertainty, given the fact that you still haven't had normalized supply chain, the supply chains are limping back, global travel is totally dislocated, business or otherwise, I think if you do want to venture into something, try and stick to domestic cyclicals or domestic focusing industries, industries like cement, infrastructure, because we have substantial amount of demand ahead for these businesses. They aren't dependent on imports or exports as much. This would be a good time to start looking at some bargain buys in these sectors, which are purely domestic sectors, which are dependent on government spending on infrastructure. That's not going to stop in the next few years. If anything, government is very clear that's going to get aggressive. So I think this is a good time to venture into absolutely domestic focused, both consumption as well as output of their sales top line, and buy into those companies. So two that immediately came to my mind as cement and infrastructure businesses, good infrastructure companies. Cement companies won't have a problem, they don't have a demand problem right now. Companies which have a substantial amount of oil input, they would benefit tremendously. One that immediately comes to my mind and will have a demand is paints, obviously. So these kind of businesses which will actually benefit from the route that you're seeing in the oil prices and what you're seeing, a collapse of interest costs, these are the businesses which will benefit the most.
Okay, we've got the Nifty now at a 52-week low. So, we're just continuing to break records on the downside this morning, across the globe and even back home. It's going to be a shaky day. We've got... the traditional defensives don't hold out either at this point, Sanjay. I mean, I know you've talked about where you probably see some value in buying, but as a safe haven as such, there really doesn't seem to be anything that's holding out apart from, of course, gold.
Yeah, obviously in a financial system route, that's why I'm saying it's not about equities, it's about the entire global financial system being dislocated at this point of time. So in this kind of situation, you will not find any safe haven in equities, or even, debt would be uncertain the way you're seeing, yield just going completely haywire. So obviously people turn to gold, but people must also realize that gold has had a substantial rally in the last few weeks. So you don't know when and what the central bankers would do that would turn focus to some risk assets like equity and other assets. Money flows are very fast. You certainly don't know when the risk-on trade will begin in case some aggressive action starts from central bankers. But we must realize that within India, we are in a fairly robust shape. I think infrastructure and all those areas are going to pick up. We are not in as bad a situation. Obviously, no one can, this is obviously given the fact that no one can game what the coronavirus impact would be. If obviously that turns into a pandemic and we can't really handle it, then whether you have equity or gold or whether what you have is not relevant, because you've got to first run and save yourself from illness. But given the backdrop that corona gets controlled, I think besides gold, there is no safe haven, but at the same time, you must realize the risk-reward equation on gold also at this point of time. And that's the reason why you're probably seeing yields turning negative or yields gone below at record levels. Even the 30-year US is trading below 1% at this point of time. So it's because people are just rushing out to, park their money even if they don't get interest. A lot of yields in Europe obviously have turned negative also. So it's complete risk aversion that we are living with. And I don't think anyone can really have any place to hide at this point of time. Just, hold on to your cash and sit it out. Brave enough, venture out, but otherwise just quietly let it all settle down. The world is not coming to an end. I think I'm sure of that at least.
This morning, doesn't it?
Right. You just mentioned that risk assets across the globe are seeing constant decline in prices. People are just selling irrespective of where the current levels are. This can continue for a while till there is any clarity which emerges. I mean, it's very difficult to call for a bottom, Sanjay, but what is the sense that you get? At what level, people would start to buy? 10-year is going down. 10-year in US is almost as good as zero now.
See, in these kind of phases, I don't want to use the word capitulation right now, but it kind of looks like that, but no one can know what really is capitulation. It's only 2020 hindsight, can you say it? But this is a typical sign that you're seeing this morning. Even the US, even the European pre-opens are all indicating markets to be minus 5-6%. That's kind of crazy. Those kind of indices with so much of depth and so much of, liquidity. Obviously, you're seeing this is just a panic, and a Mexican peso going down 7 or 8% in a day. So you can understand there are no fundamentals at work. There is no sanity at work of any kind at this point of time. So to cut a long story short, I come back to the same thing. Just beyond the sidelines, no one can call a bottom. I cannot say whether today actually is a capitulation, but I can only say that the risk-reward equation is definitely much more favorable. Dilesh has said, a while back that we had corrected 15% from the highs in most of the earlier panics. We are more or less there in India right now. May go down another 2-3%, God knows. But if, like I said, Corona is going to go out of hand completely, none of us can game that. It's not even a black swan event. It will be something new we'll have to label. So, as long as you know that companies are here to stay, consumption is here to stay, people will buy, infrastructure will roll out, expenditures will carry on by the governments will come in and settle. And you have to understand that governments across the world, central bankers and governments have enough firepower to handle issues and to calm the markets, to give time for markets to get sanity, all participants to start looking at things logically and stabilized. We've seen 2008, we've seen MERS, we've seen SARS. It's just that the moment when you're going through the worst part of it, it's most painful to bear what we're seeing now. But once things settle down, part of the surgery is over by the central bankers and the government policy makers. I think maturity will return. People will start to, understand what to do and what not to do.